Welcome to the Renegade Insurance Podcast, a podcast dedicated to agency owners, insurance agents to help you grow your business and be more successful. Every episode, we will bring you a different interview with more information about carriers, contacts, and products to help you every day in your insurance business, to help you with clients and to grow your company successfully. Hi, everybody. Angela Duncan for another episode of the Renegade Insurance Podcast. I'm super excited today because we are going to bring you a different type of insurance product that you may not have heard of, but we will dive into the details today, kind of give you the cons and the pros of the product and why you definitely need to know more about this company, Norman Max. Jonathan Friedland, welcome to the Renegade Podcast.
Thank you so much, Angela, for having me. Really excited to be here.
Yeah, so I love to start first with the person that I'm interviewing. Can you tell us a little bit about your background, the history, how you started in insurance, and then how you joined Norman Max Company?
Yeah, so I've been in the insurance space for 20 years. I was with a prior company that was in a middle market in the state of Florida, Universal Property, and I've done multiple hats there. I was in underwriting, I was in finance, I was in learning development. In the last 10, I was in sales and marketing. And I joined Norman Max in August of 2024. Norman Max wanted to grow their footprints nationally in the mid-markets. And I had relationships in South Carolina and in Florida. So it's really nice to be able to cultivate those relationships at Universal and now cultivating those relationships here at Norman Max.
Gotcha. Yeah, I'm a big fan of Universal. Obviously, being here in Florida, I also do a lot of condos, so you can understand why I utilize their products a lot too. So how did Norman Max Company come about? Can you talk about maybe the history of the company?
Yeah, so our founder, Brad Meyer, CEO Brad Meyer, started Universal Property as well. And 13 years ago, he started an MGA called New Paradigm Underwriters. And they had to outsource their capacity to third party. There was obviously there's some troubles there to obviously trying to renew capacity every single year. And having prior experience starting his own carrier, he got the idea of getting a syndicate, which he got in early of 2024. So that's Norman Max Syndicate 3939. And he was able to do all the capacity on its own to support the underwriting, the back end underwriting. And we have two MGAs under Norman Max Syndicate 3939. We have Norman Max Insurance Solutions. That is the cover holder here that can write in the United States, the Caribbean, and Latin America. And also we acquired a company called Flood Flash. They offer flood parametric in the UK, but now we're able to offer that globally.
Okay, awesome. So today we'll concentrate not on the flood side, but the first syndicate. So for those that are listening and that are interested, of course, they can go to the website to check out all the products that are available. But what exactly, because this is a different product, right? Most clients are used to, we talk about Universal. So they're used to homeowners insurance or condo insurance. What type of products does Norman Max fill for the clients that need you?
Yeah, so if we're talking about hurricane, right, especially in Florida, Norman Max offers earthquake, hurricane, and flood. But really, at the end of the day, what Parametric is meant for is to be that supplemental, complemental policy for the client. Traditional coverage has deductibles, they have limitations, they have exclusions. That's where we kind of come in. A lot of brokers that I've spoken with through my travels, I like to refer it almost as AFLAC. It's almost like an AFLAC. It's almost like an umbrella. But there's no deductible tied to them, and we come in at a smaller supplement and really fill those gaps to cover again those things that are excluded, below deductible, or have limitations.
Right. So we're not replacing the homeowners. This is an added policy to that to help expand those coverages, right?
Yeah, correct. So we see a multitude of ways of how brokers are selling this, whether it be on the residential side, if it's seawalls, landscaping, docks, pool cages, you name it, we could cover that. If it's really for any and all economic loss. On the commercial side, we're seeing things like business interruption. There's not a lot of traditional markets that will cover that. So Some folks are almost using it as a cash flow product because of that quick liquidity. Once a trigger is met, that predefined trigger for the predefined amount, once it hits that threshold, payments can be made.
Okay, so let's back up first to the residential side. So say I have a house that's on the water, right? So I have a
Mhm.
seawall, I have a dock, some great landscaping, a gazebo outside. Most of those items are going to be excluded oftentimes from my homeowner's insurance. So for example, Tampa Bay 2 years ago got hit with a double hurricane. I have some clients that were on the water that lost their boats and their docks, and their homeowner's insurance didn't cover that because that's just not part of the homeowner's policy. So what you're saying is that this product, when added to that, then you guys could step in to cover some of those items that are excluded for the homeowners.
That's absolutely right. So the front end underwriting also is fantastic because we don't ask for 4 points in wind mits, prior losses, what's the construction type, is it vacant? It's really, it could be anything. It could be vacant, it could be short term, it could be a builder's risk. We really just, it's what the location is versus the peril itself. So that being said, the insured, the broker just puts the address in, and then what's the pressure point? Is it the dock? Is it the seawall? Is it their deductible? Can they not obtain coverage? And they come to us at any limit that makes sense to them. We could do limits from $10,000 in limits all the way to $10 million in limits. So it's really where that pressure point is for the client and also what their budget may be. They set that limit. And then again, once those triggers are met, they could use those funds for any economic loss. So if you have a client that comes to us just for their dock, let's say, and a storm comes and their dock is fine, but they have other out-of-pocket expenses, we can still cover that.
Okay. Oh, that's really good to know too. And there's no deductible once they place that claim with this product, correct?
That is correct. There is no deductible tied to this.
Yeah, which is like, in that same instance, if you had a hurricane that hit your home, your deductible that you're coming out of pocket can be quite massive.
That's correct. Yeah. And again, that's where that Aflac analogy comes in, where we're just trying to fill that gap where traditional kind of falls short sometimes.
Yeah, and it's great product too for people who, do choose to live in those areas and have some of those additional items that are excluded from their homeowner's policy.
Exactly right. And, we're seeing a lot of exposures, not just in Florida and Louisiana, the Carolinas, Texas. Really, the harder it is to place the policy, that's where
Mhm.
Parametric really shines the brightest.
Gotcha. Now you touched a little bit on commercial. So we're talking about commercial properties. What other coverages that are offered through Norman Max that perhaps might be excluded from a traditional, commercial property insurance?
Yeah, so again, it's the same type of solution. It's any economic loss, whether it be business interruption, contingent business interruption, supply chain issues, loss of revenue, you name it, we could cover that. One of the best success stories that we've had was in Jamaica. For last year, where Hurricane Melissa hit as a Cat 5, so it was
Mm.
100% payout, and I believe it was two hotels. And they filed a claim on Tuesday. We got the information back and we were able to make full payments within 10 days. So it's that type of quick, transparent liquidity to give to a commercial exposure to get that cash on hand and be able to keep up and running with their day-to-day operations.
Yeah, and that's a great point that you just touched on too. So the turnaround time, sometimes when we have hurricanes, especially in Florida, the insurance carriers are overwhelmed and maybe, they have to go through this processing with the paperwork and the photos and stuff like that. But you just mentioned that Norman Max, part of their, benefits for the clients that do purchase the policy is that fast turnaround.
Yeah, I mean, at the end of the day, we're still an indemnity solution. At the end of the day, you still have to file a claim.
Right.
But we don't ask for receipts or photos or estimates. There's no field adjusting. It's just a simple proof of loss that the client has to fill out. We get that information back that they suffered an economic loss. We see what the triggers are, and then payments can be made.
Okay. You mentioned the word triggers. So let's talk about that. What does trigger, and kind of, you said there's different levels too. If you can just bring it down to a really basic level, obviously, if they want more information, we would do more of a one-on-one with you. But what does that mean?
Yeah, sure. So we offer three different types of wind triggers at a location. Our single trigger is really just the National Hurricane Center reading at a location. The National Hurricane Center uses RMS Moody's, the RMS H wind. And what we could do is it's at all 60-second sustained wind speeds. So we get that data back from them and say, hey, this is what the wind speeds were. And it's a percentage. So if a client buys, whatever limit it is, for residential, we start the trigger at 65 miles an hour. For commercial, we start at 74 miles an hour. And it just goes up based on the percentage payout goes up based on how high the wind speeds are. So that's the single trigger. The dual trigger, we have a anemometer network from Texas all the way to the Northeast, really just strategically placed on the coast. And the anemometer network is being managed by a company called Weatherflow. And it's really a second opinion reading. Sometimes an anemometer could be 5, 10, 15, 20 miles away from a location. So you're certainly going to have two different readings. And we're going to pay the highest of those two readings.
Okay.
So if the National Hurricane Center says it's 70 miles an hour and the anemometer reads 80, we're paying off 80 or vice versa. And then the triple trigger is you get both those two wind readings, but we also put, it's just called a cat in a circle. We can put a 15-mile circle radius around the insurer's location. The insurer's location is always the center point. And if the center of the eye wall, any part of the eye wall touches that circle, depending on the severity of the storm, we can make payments on that as well. So we're always going to pay the highest of the three triggers.
Gotcha. Okay. So there's different ways that you're looking at it and different triggers that could occur for a client.
That's exactly right. And, having more triggers really takes the basis risk out of this type of solution. We're always going to pay the highest of the three, or highest of the two.
Okay. Being that you're in the marketing also of, with Norman Max, if you were talking to an agent and you're explaining the products and how it works, what would you say to us to help us, sell the features of this product so that we can ensure the clients understand a little bit, enough about the product, but give us some talking points that you would teach an agent?
Yeah, so I always try to focus on the fact that we're able to cover pretty much anything and everything. Remember that you have now a resource with us where if you have a hard to place risk or something that you can't get covered, that you can come to Norman Max and have that coverage, whatever it may be or whatever it could be, both commercial and residential. We see a lot of marinas, we see a lot of golf courses, we see hotels, restaurants. On the residential side, we see folks on barrier islands, maybe they have prior losses. So you now have a solution with us where if it fits their budget, if they have a pressure point, they could come to us and solve that. We could also do a lot of different, Parametric is very flexible. So I've seen different types of structures. When I say structures, it's just different types of payout tables where if a client really is just worried about a catastrophic event where they want something Cat 3 or higher, we could do that. Maybe we don't start the wind speeds at 65 miles an hour. Maybe we could start it at 85 miles an hour or 95 miles an hour. Maybe you have a client that says, well, this is fantastic. I have multiple locations. Can instead of 15-mile circles, can we make it 25, 30-mile circle radius? We can do that. So it's very flexible. It's not a take it or leave it proposition. And that's what I find very attractive to Parametric is how flexible it could be to meet a client's budget or appetite for coverage.
Awesome. Yeah. Very customizable. So that's not something that we see a lot in the insurance world because we're usually following the insurance rules or whatever guidelines and eligibility that they have. Whereas you're working more with a client, figuring out what the situation is, what the risk is, and then how do we make it make sense for the client too?
Exactly right.
Okay, awesome. If a agent listening to this wants to get more information, how do they reach you and the website?
Yeah, so they could contact me directly. I can be reached at my last name, Friedland, at normanmax.com. They could reach out to me. We could set up a call. I'm happy to do Teams calls. We could do Zoom calls. And then, the appointment process is very easy. What's also great is we don't have any production requirements. So we're not going to say, hey, we need 10 policies a month, as much as we would love that, but there is no, some agents may have that, it's another mouth to feed another carrier, but we don't have any production requirements. It's a fantastic solution to be able to offer to your clients nationally.
Yeah. And that is important to us because, we ebb and flow. So to say that we have to have a certain amount of required policies in order to stay with you, I'm glad you're not going to just kick us out.
That's right. Absolutely.
Awesome. Well, thank you so much, Jonathan. I really appreciate your time today.
Thanks, Angela.
Thank you for tuning in to the Renegade Insurance Podcast. If you would like more information, would like to join the Renegade Insurance family, go to renegadeinsurance.com today.